Hello everyone, welcome back to another video. In this video we're going to continue with the last part in which we discussed how we can use order flow with volume profile. So what I've done today is we have the live markets here, so it helps us understand a little better and see how the concept works in real time. This is again to reiterate for people who find it a little difficult to understand order flow in the beginning, or it becomes a little overwhelming to see order flow charts. So I'll start with what I have on my screen so that everybody understands and we are on the same page. So on the extreme right, what I have, firstly we're going to look at some setups on the bank nifty and specifically on the options chart, because a lot of volume is there and a lot of guys, even most of the retail, is trading only on options, whether it is buying or selling. And on the extreme right, I have the bank nifty futures chart. Along with it, I have the volume profile, if you can see. And just to the left of it, I have the CE option, that is 50,900, just in the money. And similarly, I have the PE option again, which is in the money over here. And again, that is my preference. If you want to use any other strike price away or inside, it's up to you, but I recommend, if you're using order flow, and which generally helps us in, taking precise entries, putting exact stop losses, and if you're scalping or even intraday trading, so it is rather you have in the money, or at least at the money option, so that even if you're buying or even selling, I would rather advise you guys to be across or somewhere close to at the money option, so that you get a better visual of the order flow that is taking place, the volumes that are transacting, and you get a sufficient amount of points. So this is primarily for scalping and intraday trading. And let us get the disclosure also out of the way, since we are in the live markets, that please consult your financial advisor before you take any decisions, and this is only for education purposes. And so let's get into it. So we're just looking at the charts that we have here. So our first job is, whenever we get into any sort of market, is to look what has been happening in the previous day. Even if you're scalping, if someone tells you that just come in and take trades, no, it doesn't work like that. You need to understand, even if you're looking at order flow, how the markets are moving, what can you expect. By what can you expect is, for example, at this time, it's about 10:20, if I'm not wrong, 10:17 over here. Okay, so how much can I get in a scalp? For example, when you are in the first half an hour, 45 minutes, you will certainly get 20-30 points with a lot of ease if you're right. Whereas in situations like these, you can look at the 5-minute bars. Okay, one down, one up, this is hardly up, then down. So we're trading within a range for the last 1, 2, 3, 4, 5, 6 bars, so half an hour almost. And so that is what you have to take into mind. So the maximum target in you, when you if you want to have in a scalp, is somewhere close to 10 to 15 points if you decided to scalp right now. Okay, and how am I deciding that? I'm looking at this chart, look at what is happening. It is within the range, so maybe later in the day it can break out or even come back into this previous day value area, or the previous day range, which it has not yet come into. So if you look, what has happened today is, I'll just get my marker on. So if you look closely, it has taken support of this area of the previous day high, and it hasn't even actually tested the close if you're talking about futures, and gone up. Okay, so for people who like order flow, for people who like market profile, so this is the view, market profile view. So you can clearly see there is an attempt that is being made to take out this 3, 4, 5 day range rather, and it is attempted and failed exactly at the same point. Okay, and always remember, if something like this happens and it is still consolidating, so if it has to break, it should happen today, and that is the high. That is what I consider, because you might say this is a single print, or this is aggressive selling, but look at where the selling has taken us. It is not even been able to breach into yesterday's range. So at this moment we have to be neutral. We can expect a break in maybe the DE or F period, rather E or F period later, if it has to break on the upside. And as of now, so why I am telling you this is, the context is that when I'm entering any trade right now, even if it is a scalp, I should be well aware that it is going to be a two-way auction. So it is going to continue like this unless it breaks on the upside or takes out the high, or it enters this zone. Let me get it here. It enters or below this high volume node that you see here. So you see these nodes, this is the low volume node, so it has to cross beyond this, and then we can expect maybe a touch of this somewhere here, and then later on the POC of yesterday. That is if we break this low or this place that we just spoke about. And then in that case, if you're taking scalps, you should always be taking a short or preferring a short. Okay, so it can be selling a CE, buying a PE, whatever you're comfortable with. So having said that, now let's get into the we'll just get this down, and let's get into the present action. So I can see very clearly now my strategy when something like this is happening is fade the extremes, because I can see, look at this bar. So whenever I am somewhere in the vicinity of, let's say, this area, okay, I can see in order flow this area, I would like to either go long on a call, or somewhere in this area I would like to go short on a put. Okay, so that is why I have both the charts. And the other thing that we've come here to look into today is, you see these charts. This is something that we discussed in the previous video, where we had a 30-second bar. What I've done is I have a 5-second bar. It doesn't matter, actually. We are not looking at the bars, we're just looking at the way the price is moving and how it is moving with respect to the volume. So what I have here is the volume profile. Just let me do one more thing. We'll go here and we'll just, so that we get more space over here, and we'll take out this. Okay, so what I am doing is, this 5-minute bar, this volume profile is exactly similar to the order flow that we have here. So if you can see clearly, look at this, there are buyers who are getting trapped. So we're going to discuss everything that we see on order flow over here as well. So the idea is exactly the same volume profile. If you get used to even this, you don't have to look at the numbers too deeply. You can just look at the delta, whatever is comfortable to you. And if you're wondering what this red bar is, it is the 5-minute or the VWAP of this particular zone. That is the 5-minute VWAP. On the order flow, we have the same thing plotted by a black line, if you see over here. Okay, so let me delete everything, and let's get back over here. So if you see at this point, okay, so we're looking to fade in this region like we just discussed. If you see over here, you look at these sellers, there's a lot of volume that accumulated here, and look at these sellers. They're trying to take the market down and have not been successful. Now if you look at the volume profile here, look at this area. Okay, so the pink shade is where the majority of the volume has transacted. Now again, the market is attempting to go down off that place. Now if you're aggressive, and since we are scalping, and always keep in mind, our entry should be somewhere close to 396 to 98, and you can see you get your 10 points just looking simply 10-12 points, and you start trailing. At this point you should be happy with anything between 10 to 15 points. Why? Look at the time, look at the way the markets are moving. So it's not necessary that it will give you 25 points till here, because look at the candles that are taking place. So exactly from the point we spoke, if you look at the volume, the market was attempting to go down in this area, and obviously on the order flow we saw a lot of sellers getting trapped, and as soon as the market starts moving up, they're all going to, even the smaller time frame traders, the scalpers, they're all going to get out. Okay, and the major chunk, or if you are expecting anything of 40-50 points on Bank Nifty, it should be above this zone. Okay, this zone, you can see, because what will happen is a lot of traders that have tried to rather buy or sell, who have got trapped, will get out at this point. If you look at this whole chart closely, what you see is, this is a C, of course. What you see is a lot of at the moment, a lot of buyers getting trapped. So you see this. Okay, and you see in this and in this area, you've seen a lot of sellers getting trapped. Look at this area, look at the delta over here, and look at the people that are getting trapped over here. Now similarly, like I just said, it just went up 15, 16, 17 points, and it is almost it's just tested the VWAP, so you can see why the VWAP is there. Again, I keep repeating in all my videos, take a trade of the VWAP only if there is a slope. If it is flattened like over here, just avoid it. It is not going to give you anything. Okay, so I know the opportunities become very less if you look only at the slope, but it is how it is. So even for example, if there was a touch somewhere here, you could have taken an aggressive entry, but look at the slope. Even though if it is giving you points, avoid trades of the VWAP if the slope is not there. You will get quality trades, and and it will keep your psychology intact. So having said that, so we just saw what we are looking at and what we are expecting to happen. So for example, if in this case, let's say if there was no accumulation, what I would have expected if there would have been a break is, firstly look at the by how much amount the low is breached. There is a high volume cluster here, and then it forms just below it. This is not the way the market is supposed to break. Okay, it is supposed to go down. After this, maybe in this attempt, it was supposed to go down and not form another cluster right in the next 5-minute bar, which is happening over here. So at the moment, again, we are close to the highs like we just discussed on the market profile chart. So what we are expecting is maybe after 10:30, let's get that chart out so that we see which period we are in. See, so if you, for people who like market profile, in this split fashion, you can do that as well, but let's avoid that. So we are still not in the single print zone of the A period. Again, for people who are new to market profile, nothing fancy. It is just signifying that there has been no auction or no transaction in this area, which has been left vacant in the first half an hour. So in a sense, this is the area I'm talking about. So on a 5-minute chart, this is the area that has not been breached or has not been tested since the time we have opened, or since the first half an hour of the session opening. Okay, the other thing that you can do is, we just get this chart down, is because order flow becomes a little confusing. So now you can see the same thing happening on the PE side, but at this point you have to be very careful in the sense that it is approaching the high of the day. So if it breaks, it will be a very fierce move to the downside. So you can see this, what is happening. That is why I was telling you to be careful here. Now let's see if this move actually fructifies or it traps traders again. Now if a move has to fructify, it should not hold for a 5-minute sort of time frame. It should just see what has happened is, if you look at this place, there's absolutely no volume that is transacted, and it is just one bar down and popped up again. So this is not what we want for the market to if it is to break out on the upside. Of course, it traps traders and then goes. So what we can expect is, if it has to break, it will go up till this 5-minute bar POC, that is 409.14, and then come back down again. So you can see it is this is no place to short. See what is happening. So if you've entered with a 10-20 points short, it has failed. Now it has come exactly to the point we were discussing, 414. This is the zone that I was talking about, because a lot of volume cluster was there and the market broke down from there. Now if, for example, you are an aggressive scalper, you can attempt to take a trade of this place like we just discussed, and again it should not be more than 10 points. Why? Because this is a zone where you can get trapped, okay, very easily. If you're entering at 414 like we just discussed, your target should not be more than 404 or 5. If it goes in the flow, it's very good. Otherwise, just let it go. And the best case is, when you're looking at something like this, it is best to avoid a trade on the short side. Nevertheless, you can see what is happening in this whole area, and like we discussed, it has now trapped the sellers over here of the put side, or rather the people who are planning to go long, and this will keep happening till about half an hour or 45 minutes, after which it decides to break, or throughout the day. It depends. We have a Sensex expiry today, so again you have to keep looking, and the more you look at the charts and the order flow along with this volume profile, you'll get used to trading and looking at charts and taking better decisions of the charts. The other thing that you can do is, when you're looking at charts, is almost a lot of platforms already have it. So what you can do is, you can switch on the simulation mode. So what it does is you can take trades and see how good or bad you are doing. So even if you have, for example, you've traded in the first half of the session, you close your trading terminal and come and switch to a switch simulation mode, so that you understand how the market moves at various times of the days, or whether various times of the days exactly. So for example, at 10:20, 10:30, I was saying that it is very unlikely that we can see a breakout unless until it was a trending day, which at the moment we've not seen. Of course, we have gone up, and we have tested, and we've left this area with a lot of aggression that you see single prints on the downside. So this area has not been tested. Similarly, this area has not been tested. So even though we are sustaining the gap up, there is something you need to see as to how the market is presently reacting. Okay, so coming back now, let's say you wanted to short this VWAP on the call side. Okay, and again, you are late because it should have been somewhere, like I just said, somewhere in this zone is where you should have shorted when this pullback was happening. Now at this point, if I say I see closely, I can get trapped in this zone if I go short. Okay, so if I am let's say planning to take a trade, so the zone I'm talking about is this one on the order flow chart. So if I take a short call, what can happen is I just get 4-5 points and the market rebounds. So again, in scalping and intraday trading, you have to be dynamic. Let's see if we can find a good trade off here. And so I would rather short a PE or go long on a call. Let's see if we'll get the trade here also. Yeah. Okay, so we have, yeah. So what I've done is I've nothing but I've attached a bracket order. So let's see. So what it does is it helps you in you can see buyers getting trapped here. What you can do is let it take a, so I will go here now. What I've done is it is just one lot. It will just give me the points that are happening. So you can plan your simulation. This is a bracket order, so you can shift your orders like this. This is a simulation mode that we're talking about. So you can see we got 4-5 points, and now that you've come down, what you don't want is that the market, if it breaches this entry point of yours, it is certainly going to take out your stop loss. So what you can do is, when you've seen something like this, maybe drag it a little lower. We are at the moment we are dealing with this is because the ranges are very small. If you see, it is just haphazard. It is very difficult to trade at this time of the day, but we're doing it. So the best thing you can do is you can minimize your stop loss. So even if this cuts, it is not going to hamper too much of your capital, or your mental capital, or your actual physical capital. So you can keep I mean trading like this. So that is why we have order flow, so that we can take precise entries. We have precise stop losses. And if you see closely why the market is turning from here, you see these traders, these sellers getting trapped here. So that is another signal that and this keeps happening so much in a ranging market that is going on right now, from let's say 10:30 to 11:30 or 12:30 till whatever time. So if I'm seeing this happening once or twice, I've seen my 6-7 points come, and I'm not seeing any breakdown. So there is no point in staying put in trades. Firstly, you should avoid trading at times like these. But since we're just doing a video, so what you can do is just simply drag and drop here and see whatever you get. So you got your 10 points that we were looking for. Now start getting aggressive. Okay, so if it breaks, well and fine. If it breaks this point, of course we will plan another entry. So you can see with such a small stop loss on Bank Nifty, we've got almost 11 points over here, okay, at this time of the day. So the idea was, again, to have a framework in mind, know what you're going to lose. That is why we use order flow, to get precise entries and decide how and when we can do it. So for example, if you're expecting a breakout of it, what I want is not sellers getting trapped. So let's go and see if it is to break out. So let's assume like you have traded aggression, because why have we done this? Because at this moment I've seen a break of this. So what I don't want is the market to come above this. So I will just place my stop loss here, and now I will start getting aggressive. Why? Because I think that was too aggressive. We should have waited anyway. So the point was because I didn't want I can see these this imbalance zone from behind, and maybe we got a little aggressive. We could have got a lot many more points anyway. So So this is the way you can apply. So it's not necessary you deploy your capital, and let me assure you that even if you practice a lot and you think you are very comfortable with this, when you start trading with real capital, things will affect your mindset. So even when you're trading with real capital, come back, go to the simulation mode for, let's say, half an hour, 45 minutes, so you get an idea of what is going on. So even in during stressful situations, you have a way to get around. So hopefully this video was of some help to you guys. Until next time, thank you, bye bye.